Hi guys, it's Ian Coleman. It's the 19th of June, Sunday. Just going to go through the FX majors. There's some interesting patterns emerging. The dollar bias doesn't look as strong as it did last week. We've obviously got Brexit vote coming in this week, so the volatility we expect to be huge. And intraday trading probably going to be extremely difficult to highlight good areas of support and resistance. The first one we're going to look at is Euro Yen, because of the stalling in this bearish price action. We did mention a few weeks ago that 117.35 was an ABCD target, and that's been broken. But levels underneath that that target level have found some buyers. But I think the most interesting factor here is that the 61.8% pullback level, this whole extremely bullish move is located here, 113.36, and last week we made a 115.48 low. Also, if we just get rid of some of these annotations now, can note that levels underneath this trend line have been bought into. So that sort of highlights that next week we could see, we'll start off with some buying pressure in Euro Yen, and because we still have a bearish bias in Dollar Yen, that should mean that Euro Dollar should make another move to the upside. We only believe that this is going to be corrective, but it does give that that bias for higher levels. Also, later on, or late on last week in indices, we did see a recovery, so there's ample scope for these yen crosses to move higher this week. So first of all, we're just going to look at the dollar index. Now, we talked about this impulse move and then this move back, and we said last week in the video that we really needed to see a break and close above the channel, this descending channel line here. What we had on Thursday was a breakout rally, but it failed and it closed back inside, and then obviously on Friday we had some more mild downward pressure. But this is now looking like it's going to make a larger correction and an ABCD formation, probably towards this 93 level and possibly 92.75. And looking at the sort of dollar majors, it does make sense for this corrective formation to extend. And if we just look, if we just pull back the this daily chart, we can note here that sort of, levels around 93 have found some buying interest in sort of middle of 2015. So it's a good support area and also a good target area. Now, if we break that back onto Euro Dollar in just the daily chart, remember we had a bearish outside day here from the 61.8% pullback level, and we looked for aggressive move to the downside. It hasn't had any follow-through selling. We're still in this expanding wedge formation that is extremely hard to trade. As we mentioned before, the wedge can keep on getting bigger and bigger, and obviously price action more and more volatile. But the interesting factor here is that we failed to close the week under our bespoke support level of 112.20. We've moved back into the cloud. Normally, intraday price action when we're in the cloud is extremely mixed and volatile. The most interesting factor here is this ABCD target level, so 114.50. So AB equals CD, and if we just put our crosshairs on, we can note that this is obviously a previous area of resistance. So we think that's going to be the focus today, this week. And again, price action could be extremely mixed, extremely volatile intraday, with this uncertainty really across the whole markets. Sterling dollar, again, moved to the 161.8% extension level that we mentioned in last week's video. But this also coincides with a 78.6% pullback. It's also an area of previous support. We've had a decent bounce, and in fact, even though we closed little net change on Thursday, this was a bullish outside day and we started to move to the upside. Now, because we've got this fib confluence area, 78.6 and 161.8%. This could be seen as a bullish Gartley formation, and that would emphasize that we should see a bigger move to the upside. Again, expect it to be mixed, volatile. So what we'd look for is A, B, C, A, B, C, and then A, B, C, and maybe even a 5-wave pattern in these corrective formations, and could quite easily break the top of this 147.62 last rally. Obviously, the first barrier is going to be this reverse trend line resistance, which should come in around 144.25 on Monday. Best trade really is to buy on dips, probably around 142.70, but we'll see how sort of price action develops. Dollar Swiss, again, we can call this a failed breakout now. It's well and truly held back inside, and in fact this was our key level, which was 97.03 last week. It moved low and we've had a low close. I think we could see a move all the way down to here, 92.50. Obviously trendline support is going to be around about 93.20, so that's sort of 93.20, 92.50 would be the buy area as we continue to move to the upside, and then we'd expect this impulse move back up probably towards 99.58 and then maybe form a reverse head and shoulders. But this area here is definitely not in focus going into next week, and in fact bears are still in control in dollar Swiss. Dollar yen, no real sort of change in the bias. We still look for a move to the downside. What is difficult now is obviously the fact that we're in the last wave of this bearish Elliott wave formation. Fifth waves are notoriously hard to trade as there's overlapping waves, etc, etc, etc. But the focus remains to the downside. Going to have to be careful to pick very decent sort of intraday resistance levels, hopefully confluence areas. Obviously if we've got fib levels and our bespoke resistance levels, or maybe even market profile point of controls from the days before, then they're going to be our focus to get short next week. But expect intraday trading again to be pretty volatile all of next week. Dollar CAD, the bias remains bearish, long-term bias remains bearish. However, moving off the top of the cloud, base of the cloud comes in around about 70, I believe. Cloud base span A 127.70 next week, and I think that's going to be a formidable support level, and then we could possibly move higher in this corrective formation for dollar CAD. The 4-hour chart highlights an expanding wedge formation, decent support again around here, 127.45. So that area, sort of 127.70, 127.45, we're looking to probably for bears to take profit, possible trend reversal, etc, etc. At the beginning of the week, you know, these doji candles late on Friday, we could see a recovery towards 127, the figure, previous area of resistance, good area to get short, to get this maybe sort of AB CD wave pattern, if you like, to the downside. Aussie dollar, now again our medium term focus remains bearish. We're in this sort of monthly expanding wedge formation. We had a doji, evening doji star formation from the top, but shorter time frames, daily, you know, choppy. We had the wedge breakout, we haven't seen that impulsive move down, and we keep on finding dips being bought into, and in fact, I'm just showing a daily chart. We'll just get rid of all of these annotations, and then we'll go to a 4-hour. What has happened here is that we've caught some interest around about the 61.8% pullback level. So if we look here, 72.81 is the pullback level, and also we could say here, well, is this a Elliott wave formation? 1, 2, 3, 4, 5. coming lower in 3, and then up again in the last wave of this corrective formation, going back to the daily chart, to an ABCD, maybe up to here, or the 61.8 at 75.80. Again, choppy price action. You're going to see Aussie dollar probably one of the volatile pairs next week, because it's going to track those stocks, and stock markets I think are going to be extremely volatile as you know, we get news bombs about Brexit, etc, etc, etc. So just to reiterate, euro yen hitting a trend and a 61.8% Fibonacci level. The dollar index sort of highlighting that we should see a lower correction before bulls re-emerge. Euro dollar, we don't want that chart. Euro dollar moving higher in an ABCD formation. Sterling dollar, Gartley, buy dips into next week. And of course, that would actually highlight or suggest that we could stay in the Remain camp. I won't voice my political views on here. Dollar Swiss, a move to the downside again could be seen as a flag breakout here from Friday. Dollar yen, bearish bias. Dollar CAD, we've just talked about. Okay, guys. Well, good luck this week, and hopefully we'll have some good trades. Be careful of volatility. Okay, thanks very much. Bye now.